Hi guys, and welcome to my channel. So what we do in this channel is we simplify tax for individuals and small businesses. We also give tips and tricks on how to navigate taxes, obviously for individuals and businesses. So if that is something that you're interested in and if you'd like to learn more about tax in South Africa, then you should most likely subscribe and check out the rest of my videos. Sometimes most of the questions that people pose in my comments, stuff that I've covered in a previous video. So before you maybe ask, just check out the rest of the content that's on this channel. Some people have said that it has helped them to actually navigate taxes in South Africa because there's quite a lot and it changes all the time. So yeah, I'm also going to leave my details below if you'd like to maybe need more help or need my services, which you will pay for. Just to clarify, I will leave my details below, but I do often answer questions that people have, general questions that is. Just a disclaimer as well, this is not advice. Like I said, I'm giving tips and tricks on how to navigate tax, and I also just try by all means to simplify taxes for individuals and small businesses. So yeah, that's what I do here. Now today I'm going to be talking about things you should know about estate planning. Now, if you don't know what estate is, okay, first of all, an estate is basically your assets, your liabilities. So the reason you need to plan for estates is that when you pass away, you pay tax. So there's tax after death, unfortunately. And if you want to learn more about estate duty, which is the tax that you pay after you've passed away, I've done a whole video about it. The video is called Tax After Death. Which is basically what it is, really what estate duty is. So please do check it out if you want to learn more about that. But basically in this video I'm going to be talking about things that you should know about estate planning. I also just want to say that if you are going to plan your estate, then I would really urge you or advise you to actually get a lawyer, or sometimes even a financial planner, or a tax professional. Or in some situations you might need all these people depending on how big your estate is and how complicated it is. So that's something you should consider, or even an accountant. So that's something that you should consider. Okay, now estate planning. Okay, like I said, if with your estate, it is very important to actually consult with a lawyer, tax practitioner, financial planner, and so on and so forth, or an accountant, or all of these people. But then I also believe that there are basics that you can learn for yourself, so that at least when you go consult with these people, you are just not lost. Or in some situations you can't afford these consultations. So what should you be looking out for? What are the basics of estate planning? Okay, first of all, know how your marital dream affects your estate. In other words, if you are married in community property, then you should at least know that. That means that half of your estate belongs to your spouse. That's what married in community property means. It means everything that you had before and everything that you had after getting married. Half of it belongs to your spouse. Basically, on a high level view, that's what being married in community of property is. And then you have married out of community of property. That one has two there's two ways you can be married out of community of property. One, you can be married out of community of property with accrual, or you can be married out of community of property without accrual. When you're married out of community of property with accrual, it means that everything that you had before is yours, and everything that your spouse had before is theirs. But then anything else now that you accumulate during the time you are married, you're going to share, right? So basically it's similar to in community of property, but the only difference is that whatever you had before you got married is actually it actually belongs to you. But also I think one of the advantages of being married out of community of property is that there's more freedom of doing things financially than when you are married in community of property. Because I mean, in community of property, when you get debt, when you do this and that, when you apply for this, you need the consent of your spouse, because you are married in community of property. Because whatever debt, whatever I don't know, whatever you apply for, even though you are applying on your behalf, automatically your spouse is included. So there's much more freedom in being married out of commutual property. But then again, the disadvantage of that, sometimes if you're married out of commutual property with someone who's dishonest, then that would mean that sometimes they might take out debt, they might do this and that without discussing it with you, knowing very well that they really don't need to. So I mean, there's advantages and disadvantages, but I mean, obviously every person's situation is different. But then you need to know the difference between these marriage regimes and how each affects your taxes and your planning and your estate. Very important. Okay, oh, the last one is married out of commutual property without accrual. That one means that what you had before is yours, and what you accumulate after is still yours. So there isn't any confusion there. Yes, that's how out of commutual property without accrual works. I personally don't know people who are married that way. I wish I could know. That's actually besides the point. But yeah, that's the third regime. Also, even there, you need to know how it affects your estate duty, that marriage regime that you've chosen, how it affects your marriage regime. It's very important. Okay, and then what? Oh, if I'm looking down, guys, I'm looking at my notes. I make notes so I don't forget anything when I'm actually doing the video. Another thing about being married in commutual property, guys, you must also remember when you are planning as well, whatever you are planning with. For instance, say for instance you are married in commutual property and your assets amount, your estate between yourself and your spouse is 10 million. Whatever you are planning, you must know that you are planning on 5, because half of that already is your spouse's. It doesn't matter who came up with it or who worked hard for it and who didn't and whatnot. Already half of that is your spouse. So if you are planning on giving this to this person and whatnot, you must remember that you are giving half of your estate. And it can sometimes become complicated, especially when your spouse is still alive and you pass away and you are trying to give bequeath your assets to people that you love and whatnot, especially when it comes to things like property and whatnot. Then it becomes complicated because you can only bequeath half of it. But then if you're bequeathing half, then that means then and it's a house that maybe your spouse is living in. They don't want to sell the house so they can give half away like you wanted and whatnot. So it becomes complicated. So it's very important that you actually seek the advice of a professional and then plan accordingly, and also include your spouse in your plan so that you agree on certain things and whatnot. Very important. Okay, another thing that's very important, I think, okay, if there's one thing you're going to take away from this video right now, I need you to take away this: the difference between liquidity and solvency. Right? Liquidity is the ability of your estate to actually pay its estate expenses. In other words, the assets in your estate is it assets that you will be able, if there are expenses that need to be paid, or debts or liabilities that need to be paid, is the assets that are available immediately. That's why it's called liquid. Are the assets that are available immediately. In other words, do you have like investments? Do you have things that you can literally sell now and be able to actually pay for liabilities, as well as estate expenses? That includes capital gains tax, estate duty and whatnot. This is huge, guys. This one is so huge because most people don't understand it. And I get it, because I mean, if your assets are more than your liabilities, then you think you're safe. You think, okay, well then I'm good. Assets are more than liabilities, so if I die, my family is not going to struggle because my assets are more than my liabilities. They're going to take my assets, pay my liabilities, and then they're good. But then what happens when your estate is not liquid? In other words, the assets that you have are actually not that they can't be converted to cash to pay but it's stuff that takes forever to convert to cash. I'll make an example. Say for instance, you've invested in property, and I'm not even gonna argue about, well, you can sell a house within a month and whatever, and a property is not liquid, guys. You can't just like tomorrow, okay, let's sell this house, okay, we're gonna get 1.5 million tomorrow, we'll be able to pay the estate duty, we're gonna be able to pay for the outstanding balance on your vehicle finance, we're going to be able to pay for the other estate duty expenses. That's not how it works with property. We all know this. So I mean, you can argue but all you want that, oh well, no, whatever, don't, we can sell the property. And the sad part is that in most cases when people invest in property, they're doing it for generations to come. So they're not expecting that when they die now, this property is going to be sold. They're expecting that their great-grandchildren and generations to come are going to be benefiting from the proceeds of this property. For instance, from the rental income of the property. They're not expecting that they're going to be selling the property now so it can pay for estate duties and whatnot, and capital gains tax and all those things. So it's very important to make sure that your estate is liquid. And one of the things that you can do that by is by getting a life cover. Get a life cover, guys. Get a life cover. It's one of the simplest ways you can make sure, number one, your loved ones are taken care of when you passed away. Number two, it's one of the simplest ways that you can make sure that all your estate expenses are paid. So in other words, get a life cover that's going to pay into your estate. And in order to do that, in order to calculate how much life coverage you should be getting, again, go consult a financial advisor, go consult a financial planner. Then they will tell you, okay, fine, you are at this stage of your life, you are looking at estate duty of this amount, and therefore we recommend that you take this much life cover. Very, very important, guys. Super, super important. One of the simplest ways you can deal with that problem is a life cover. So know the difference between being solvent. When you are solvent, that means your assets are more than your liabilities, which is great. It's excellent. It's good. But liquidity, equally important, if not more, because it's so sad when a person has worked hard to build a property portfolio and make sure that trying to make sure that generations to come will be taken care of. They will be able to live off of the proceeds, and then those assets now need to be sold in order to pay for estate expenses. So very important. So if there's one thing you're going to take away from this, or take out from this video, it has to be that difference between liquidity and solvency. Very, very important. And liquidity is very important, very, very important. But then again, these are things that you learn if you go and consult a professional. Again, very important, very important. Another thing that I think is as very important when it comes to estate planning. Remember, guys, that your retirement benefits don't form part of your estate. Now you might be thinking, hold on, what do you mean? Those are my monies. Retirement is mine, pension is mine, provident is mine. Yes, I agree, they're all yours. And it's your estate, but they don't form part of it. This is why. Retirement benefits, okay, I'm going to be referring to retirement benefits. That's what they're all called. Pension, provident, retirement annuities, they are called retirement benefits. And the reason for that is because you only have access to this in retirement. Obviously, notwithstanding all these new laws that South Africa is trying to initiate now and whatnot. But retirement is supposed to be available to you when you retire. So I'm calling all of them pensions, provident, and retirement annuities. I'm calling all of them retirement benefits. They do not form part of your estate. And this is the reason. Retirement benefits are what? They are under the Pension Funds Act. And the Pension Funds Act is what? It's ruled or controlled. I'm looking for the right word, but English dololo. So they're under the Pension Funds Act, and the Pension Funds Act is controlled or ruled by the trustees, right? So they are people who are trustees of the pension funds. In other words, there are people that make decisions for the pensions, for our pensions or retirement benefits. Now, how does this work? When you pass away, yes, you nominate beneficiaries for your retirement benefits and whatnot and whatnot and whatnot. But when you pass away, this is what happens. The trustees investigate all of the people that were benefiting from you financially, and then they distribute your retirement benefits according to that and nothing else. So what am I trying to say? The beneficiaries that you nominate are used as guidance, but it's not final. So if you've nominated your wife and your child as beneficiaries of your pension, of your retirement benefits, be it a pension or retirement annuity or a provident fund, it's not guaranteed that your retirement benefits are going to go to your wife and child. If there are other people that you are supporting financially, then they might be able to get a portion of that, provided they can prove that you were supporting them financially. That's all that's required. Proof. Now, why am I telling you this? I'm telling you this because super important. If you have multiple people that you are supporting, say for instance you're supporting your in-laws, your cousins and whatnot, and this is very common in mostly black families, whereby a person is a breadwinner, so they're supporting this one there and supporting this one there and supporting this one there. Those people are most likely all going to benefit from your pension fund benefits, and not just your immediate family like you want. I hope I'm clear. Now, I know this is also controversial, but I feel I must mention, if you're a married person and you have extramarital activities and you happen to be supporting your extramarital activity people, then chances are, if they can claim and prove that you are supporting them financially, they will be able to get a portion of your pensions, even if you have nominated your spouse and your children. There was a hoo-ha last year on social media platforms. I'm pretty sure you guys wouldn't have missed it, or if you did, if you Google it, I'm sure you'll see it again. There was a woman that was saying that my husband of 17 years, my husband of 17 years mistress was able to claim against their retirement annuity because they could simply prove that the mistress was being supported. So that's something that you need to be aware of. That's something that you need to know. Again, what is the one thing that you know? If you nominate a person as the beneficiary, the money is going to go to them, no questions asked. Again, life cover, guys. I will never stop preaching about a life cover. It's one of the best ways that you can actually make sure that your family is taken care of and that your debts are paid when you die or something happens to you. Again, guys, this is not advice. These are just tips. Please, this is not advice. These are just tips. So very important. If you want money that's going to go straight to the people that you said it must go to, then it's your life cover, my friend. Life cover. That's what's going to go straight to the people that you said it must go straight to. Okay, I hope that's clear. I've covered everything, guys. So again, if this video, if you enjoyed this video and if you learned anything, or if you think the information that I've shared helped you in any way, please just give it a thumbs up and also subscribe. Yeah, and also share it if you can with your friends and family. Yeah, otherwise I'll leave my details in the description, and please, this is not advice, simply tips and tricks. Thank you guys so much.